Coming up on Market to Market, low water levels plague a major shipping channel. Again, fighting back against the use of food as a weapon. Then we're going to tell you about breaking barriers in the vet clinic. And market analysis with Chris Robinson next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 22nd edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. It was deal and no deal this week with the economy. There is no deal with Congress keeping the U.S. government operational or an agreement between the United Auto Workers and the big three automakers. The Fed did make a deal to keep interest rates the same, but left the door wide open to at least one more hike in 2023. Existing home sales, which have slowed on higher inventories and lower availability, fell for the third consecutive month in August by 0.7%. For the year, the market is down 21% over the same 8 months in 2022. The Rural Main Street Index sank below growth neutral for the first time since March. The monthly survey of bank CEOs in 10 states dropped on anticipated lower farm income. Much of the same region surveyed by Creighton University has been in a dry weather pattern this summer. The bill for reduced flows into the Mississippi River is coming due, and again forcing changes in how goods are shipped up and downstream. Here's David Miller.
A dry year in the Mississippi River Basin has resulted in a dramatically reduced water flow along nearly the entire navigable portion of the river.
The challenge that we have here, as well as everywhere else in the country, is the answer is rain, and we don't see rain in the Mississippi Valley. And so we're going to continue to face these challenges. We're going to have to continue to be proactive and work with our locals and our state governments. But until we get rain, we're going to be faced with these kind of situations.
The low river levels have created a repeat of 2022 with barges and tows parked along the riverbank. The slower flow pushed barge rates sharply higher in late August, and those rates have now doubled. Last year's trend of barges being loaded at lower weights has returned. Transport companies have announced restrictions on the volume of freight due to the shallow draft conditions in the main channel.
When it slows down and you can't have as much throughput, you can't push as much through that river system, then ultimately it's going to affect the the initial producer, which is a farmer, right?
Winter snows and spring rains helped recharge the watershed, albeit temporarily. However, a dry summer has greatly reduced the overall flow. The Mississippi River at Memphis, Tennessee set a record low last year, and the current reading is near that same mark. Low flow rates have also been observed on the Ohio, Illinois, and Missouri rivers. The current levels hit about a month earlier than they did in 2022. What started as an issue upstream has led to challenges downstream. Here in New Orleans, where fresh and saltwater meet, a new issue has arisen.
Our challenge is we don't have enough force in the river, and that allows salt water to move from the Gulf of Mexico upriver. When unimpeded, it can move as far as New Orleans and Baton Rouge.
Rain did fall in isolated areas of the Corn Belt this week, but only delayed the harvest a day or two. The level of severity in this week's drought monitor increased by almost 4 points to 55.67, the highest level of severity since mid-June. For Market to Market, I'm David Miller.
World leaders descended on the United Nations in New York City this week for the annual General Debate. The high-level theme this year was rebuilding trust and reigniting global solidarity. Food has been known to be a weapon between feuding countries. For much of the last 18 months, the world has watched Russia invade Ukraine with grain and the farmers producing it caught in the middle. Peter Tubbs reports.
Criticism of Russian grain export policies grew this week. During opening debate at the 78th General Assembly of the United Nations, Ukrainian President Volodymyr Zelensky defended his country's attempts at maintaining port access to the Black Sea, which allows Ukrainian grain to be exported to global markets.
The Ukrainian ports in the Black and Azov Seas have been blocked by Russia. And it is a clear Russia's attempt to weaponize the food shortage on the global market in exchange for recognition for some, if not all, of the captured territories. Russia is launching the food prices as weapons.
Russia did not renew the Black Sea Grain Initiative in July, and the pace of grain exports leaving the Black Sea has slowed. Concern about food insecurity in developing nations has grown as a result of Russia's actions. Around 10% of the world's population is food insecure.
Défis qui devraient nous réunir ici et ailleurs.
The challenges that should bring us together here and elsewhere are used as geopolitical arms. The energy weapon, you know it, has been used, and now is the food weapon that Russia exploits in a completely unscrupulous blackmail.
Hunger and poor nutrition undermine health and educational outcomes and well-being. Food insecurity also has economy-wide impacts, contributing to lower productivity that holds back economic growth.
For Market to Market, I'm Peter Tubbs.
Those who finish first get remembered. We know Amelia Earhart, Oprah Winfrey, and Danica Patrick for their entries in male-dominated industries. Add in a woman breaking the glass ceiling, or in this case, the barn door, it is worthy of telling her story. A warning for you, there is discussion of suicide. Colleen Bradford Krantz reports in our cover story.
An online search for who was the first female veterinarian in the United States generates top results that are a bit misleading. No, it wasn't Dr. Florence Kimball, nor was it Dr. Eleanor McGrath. While both of these 1910 vet school grads helped pave the way for other women in a male-dominated field, the search should have favored a woman who graduated 7 years earlier, Dr. Mignon Nicholson.
If you go worldwide, there's some earlier than her, but she is the first in the U.S. Unfortunately, nobody really knew much about Mignon Nicholson.
When Dr. Erickson, a professor emeritus with Kansas State University's Veterinary College, was asked to give a speech about pioneering women in veterinary medicine, he found Mignon Nicholson's story elusive enough that he asked a couple librarians for help. Together, they were able to pull together a rough picture of the 1903 graduate's life.
Her childhood, as far as we know, was in Ravenswood. It's a part of Long Island in New York City. And all I know is that she took care of the dogs and cats in the community. She read about dogs and cats, and she read about human medicine and surgery. She also married at a young age as well, too, from what we know. And her first husband was a traveling salesman. So she was home alone.
It's unclear what brought an end to the marriage, but by the time she was in her early 20s, she had moved to Chicago. Defying the odds, and likely surprising administrators when she applied, Nicholson was accepted into MacKillop Veterinary College in 1900.
It's one of the largest private veterinary colleges of that day. It had some 1,200 graduates, I think, at that time. MacKillop was probably one of the more progressive schools.
The now-defunct Chicago College was co-founded in 1892 by a local horse farrier, Matthew MacKillop, who also had a veterinary practice. Although not owned by descendants and now in a different location, his veterinary practice still exists today. Besides admitting a woman, MacKillop Veterinary College had also, 4 years earlier, admitted Thomas Madison Durham, believed to be the third African American to earn a professional veterinary degree in the U.S. Erickson said there can be challenges in determining these first in veterinary medicine due to a failure to preserve journals and other documents from more than 40 now-defunct vet schools. In 2011, a University of Missouri Veterinary School librarian study showed no indexed records could be found for 18 of these schools, which the author described as a loss of essential information in the history of veterinary medicine. Although most of MacKillop College's journals have been lost to history, a handful did survive, including several at the University of Illinois Urbana-Champaign, but they aren't from the years when Nicholson was a student. Erickson did find evidence in a Chicago City directory that Nicholson ran a small animal practice during her first year at MacKillop, probably from her home. She added pet boarding during her second year.
And the horse was the primary species that was studied at that time, although they did study dogs and cats and small animals, but it was unusual for somebody to establish a small animal hospital.
It's possible some of her peers and professors were less than welcoming to a woman. An American Veterinary Medical Association article reported that one of Michigan State University's earliest female vet students, Dr. Dorothy Segal, ran into barriers 3 decades later. According to the article, the dean called Segal and 6 other female students into his office and told them to, quote, go back to the kitchen. Segal, at least, didn't listen. And today, women account for about 80% of U.S. veterinarian college students. As Nicholson neared her graduation, she was featured in a 1902 article in the Chicago Tribune, which declared no other woman, so far as known, has done this kind of work. Within 6 months of graduating, in September 1903, she married a man named John Jackson, co-owner of a Chicago restaurant called Becker & Jackson. It's unclear if she continued practicing after her marriage, but later news articles would imply she was struggling with alcohol addiction. Her marriage fell apart. Finally, just 3 years after becoming the first female to earn a veterinarian degree in the U.S., her life came to a tragic end.
She'd gone to the cafe to try to patch things up again, and he said it's no use. And they'd gone back together once before, and she'd gone back to drinking again, and he said it's no use. So she stood up and pulled out a revolver and shot herself, and right there in the cafe.
Back then, Dr. Erickson points out, alcohol and mental health treatment was less advanced than today, and her struggles should not diminish her accomplishments.
I would just say that there's suicide in all professions today, and it happens in veterinary medicine as well. You've got to admire her that she had enough, grit to go through the curriculum at MacKillop.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
Russian wheat exports continued flooding the market while harvest pressure and outside markets weighed in for attention. For the week, the nearby wheat contract fell a quarter, while the December corn contract added a penny. The soybean yields may be better than expected, while technical bots pushed the trade lower. The November contract dropped by 44 cents, and the December meal contract shed $6.30 per ton. December cotton shrank by 53 cents per hundredweight. Over in the dairy parlor, October Class 3 milk futures tumbled 98 cents. The livestock market was mixed. October cattle improved 15 cents. October feeders cut $5.33. And the October lean hog contract declined $1.60. In the currency markets, the U.S. dollar index added 35 ticks. November crude oil fell a penny per barrel. COMEX gold lost $1 per ounce, and the Goldman Sachs commodity index shed nearly 10 points to settle at 611.60. Joining us now, market analyst Chris Robinson. Hi, Chris.
Good to see you.
Good to see you. Let's talk with wheat, like we do. Demand is maybe starting to pick up, but we still have this Black Sea issue flooding the market, altering prices. How much longer can that narrative play out and impact U.S. farmers?
I wish I knew. I mean, this is a year where if you followed fundamental, if you were a fundamental trader, you would have thought on multiple times we should have had much, much higher prices. And every rally was met with more selling from Russia. So it was really something, I think we'll be studying this for a while, because with all of the risk and all of the worry, every weekend we went home, what's going to happen, what's going to happen? And every time we got a good dollar rally, $1.50 rally, it did not hold. So at the end of the day, I think that we're trying to find a bottom down here. We're at 2-year lows. But then we get into this game, it's like playing mousetrap. They go back and look for what's the next low, what's the next low. And at some point, we're probably going to have like a big reversal. But boy, anybody that's tried to buy that bottom in this past year, it's been very, very difficult. And it's been especially hard because we have had a couple good rallies, and you think, okay, we're going to be all right, and then they've been so short-lived. It was a really, really tough marketing year for wheat.
So with CoBank saying this week that Russian wheat exports remain the biggest threat or risk to U.S. wheat elevators, what do you do if you're sitting on December wheat or March wheat? You selling yet? I mean, it's hard too when you're saying 2-year lows.
We're at 2-year lows, right? And it's really hard to sell into $1 or $2. We just dropped $2.12. 6-7 weeks ago, it looked like we were going to be all right. So I think it's hard to do that. If you don't want to sell it, don't kid yourself. I mean, there could be one more downdraft. If you go back and look at 2013, which was the last year we had kind of similar market action to this, both corn and wheat from September to December, they dropped $1. So for somebody to say, no, it can't go any lower, I think that's disingenuous. I think that you've got to keep a floor. If you're going to store it, you've got to keep a floor. And you don't want to spend too much because we're already at 2-year lows, but it doesn't mean we can't go lower. So store it, protect it. If you have to sell it, please take a look at re-owning it, because we are so overdue for a correction higher. And I don't think that it's something where you sell it and then you're going to re-own it for next week. You re-own it for 3 or 4 months.
You could also probably say some of the same things about corn right now, too.
Absolutely. Sitting at 2-year lows with the commodity funds short corn and short wheat. So they're leaning on that market. They're still long soybeans. They're actually long the whole soy complex, although we did get some sell pressure here this week. They sold some last week. I'm sure they sold some more this week. You mentioned that stat earlier. I think we were down 40 cents on the week for soybeans. And what's been driving that is the yields are bigger. The first stories of yields are better than people thought. A lot of people thought that the 2 weeks of heat was really going to clip the yield, and it hasn't. And now, this is a big weekend. A lot of guys are finally going to get rolling, and we're going to start, the rubber's going to meet the road, and we're going to find out what the yields actually are.
Let's go put a bow on corn for just a moment on that deferred contract. Or do you see any hesitation from people to pull the trigger on a sale or even do a re-ownership that you're talking about? I mean, is there hesitation, or is there what more can I do, throw my hands up in the air?
Well, I think it depends on what you've done to your marketing year. We had over 100 days of corn north of $6. We had opportunities this year. We go back 10, 12 years ago, we would get above 430 3 or 4 times, right? It wasn't very long lasting. Soybeans, we were well above $14 for a while. Wheat, I think, was a different story. It just was basically drifted lower with a couple returns. So it depends on where somebody's hedged. We had a lot of opportunities to hedge or sell corn around $6. So if you're unhedged and you're thinking, well, I don't want to lose it down here at these 2-year lows, then I think you've got to make sure that you keep some sort of a floor under it, set it and forget it. Is there carry that you can capture? We're going to get into one of these markets now is there going to be carry? You and I were talking about this before. You've got to do the math, because make sure you can capture that carry. It might make more sense to sell it and buy a T-bill where you can get 5% guaranteed rather than take the risk of not capturing the carry.
Which could also be your play in soybeans too.
Absolutely.
Right. So, I mean, you mentioned the capture the carry opportunity. Technically, we've washed out 50, 100, and 200-day moving averages. So, technically, what does that tell you before you even look at the fundamental story?
Well, technically, we're halfway back. We had our entire marketing year went from 1130 to 1435 off of those lows this summer. And when we got to 1435, people were talking about $15 beans. So we're kind of back here to this 1280, 1290 level. It's a very, very big report. You and I have talked about this. In the last 2 years, we've seen so many market moves where it moves X and comes back half of X, or we've seen it over and over again. That's the influence of these computer traders. It's been an amazing thing to watch. So we're at a key level. If you're thinking about selling soybeans here, the big number was 1233. Why is that a big number? 1233 puts you in the top 1/3 of available prices for the whole year. If you're one of those person where you try and get in that upper level. So, you know, if you sell it here, I think it's worth taking a shot and re-owning it. But you know, soybeans have been the best numbers game, to put it mildly, because most guys, even at $12 beans, they're still doing okay. We're not at 1130 or not sub 11.
Let's get to livestock for a moment. Cattle on Feed came out today. The headline is United States cattle on feed down 2%. Is the headline accurate?
Yeah, as expected, and friendly, supportive. We've seen this for the last year and a half, right? It's been the biggest bull market. Go back and look. We've had a couple corrections, but the demand has held up. And despite all the other stories that are out there about, are we going to have a recession? Are we not going to have a recession? I think I think that the consumer is going to be the person that's going to put the top in for cattle. As long as people keep buying it, and as long as the herd is smaller than it needs to be, we're at record high prices. What do you say when you're at record high prices? I'm
going to go to something you said in your newsletter today, but it's similar to both cattle and feeders here. You were talking about when people ask you, are the highs in? Yes, I'm guilty of asking that question. But what does this pattern say? Is there anything different as we have hit a high and now kind of trended lower? Is there anything technically you see in that feeder chart?
Not really. I mean, the feeder chart, I think that there's a trend line down there that we've hit a couple times. The last time we were there was in May. That was the last correction we've had. There's always a risk that if we do have something change, somebody says something, some politician says something, something happens where something unexpected happens, then we could have a bigger correction lower. But technically, we've had so many outside days and reversal days and key reversal days. This market has just been full speed ahead, and it's been something really to watch. Sooner or later, it's going to correct. But again, I think as long as the demand is there, we may see these prices continue.
I'm looking at hogs to see if there's anything different about them. Is there?
The hogs had a difficult year. The first 6 months, we just kept trending lower and lower. That was the spread. I call it the spread du jour. Everybody wanted to be long cattle, and they would hedge it by selling the lean hogs. And it's just kind of an economic decision, too. It's harder to rebuild the cattle herd just because of biology than it is to rebuild, the hog herd. And, we've had our fits and starts. We've had a couple times where it looks like we were about to turn the corner. When the Chinese, about 2 weeks ago, decided that they were going to really hit the pedal and just print money to try and turn their economy around, people were like, well, that money's going to come through. It's going to help pull up demand for our lean hogs. But yeah, I think that you'll probably continue to see that spread, especially if people want to stay long. And the interesting thing is, the managed money, the funds, they're actually bet long the entire protein complex. So they're bet long with the producers.
And we are long out of time. Chris Robinson, good to see you. Thank you so much.
Thank you.
Appreciate it. Hold tight. We're going to pause this analysis and continue our discussion about these markets in our Market Plus segment. You can find both Plus and analysis on our website at markettomarket.org. As you head to the field this fall, take us with you. We want to make sure that you keep up to date on commodity market analysis and news around agriculture with our 3 podcast offerings. 2 of them come out on Friday, and the third, the MTOM, is released Tuesday. Subscribe or follow where you get your podcasts today. Next week, we look at the ever-moving fertilizer market. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.